What is a DSCR loan and is it a good fit for you? Are you running into a situation where your debt to income ratio is too high to qualify for conventional financing? Then this might be the answer you're looking for. DSCR is short for debt service coverage ratio. In this video, I'm going to go over what is required to qualify for this type of product and what its purpose is, why it's a very popular product among investors, and how you can get started. If you're new to this channel, welcome. My name is Candy Katz, and I help investors and homeowners just like you qualify for financing for real estate all across the U.S. Let's get into it. DSCR, short for debt service coverage ratio. It is a no ratio loan product for cash flowing properties. So for example, if you own investment properties that are cash flowing, what we look at is your market rent or the lease that you are currently active on. So long that amount is higher than the mortgage that you're paying, then this is a product that you may want to hear more about. DSCR basically means that the rent you're collecting on your investment property is more than the mortgage that is being paid, making this a very popular product among investors. Why? Because of the less documentation that is required. All of these traditional tax returns, pay stubs, W-2s is not needed to qualify. So what are we looking for to qualify you? The last 2 months' bank statements needs to support your down payment along with any reserves. For example, if you're purchasing a property, be prepared to have 20% down as a seasoned investor. If you're new to investing, I would encourage you to have closer to 25% down. And as far as assets, what we need to make sure you have in the 2 bank statements are the 3 months reserves. Now, the more that you have in assets, the stronger the application, obviously. So for easy math, if your mortgage payment is $2,000, just be prepared to have 3 months of that being that $6,000, in addition to the 25% down closing costs. And what is considered reserves? Any checking account that you have, savings for personal business, you have a 401k, mutual funds, bonds. Let's get into loan size. If you are loaning more than 65%, then the max loan amount is $1.5 million. If you're keeping your loan to value below 65%, I can write your loan up to $3 million. Credit. Credit plays a very important role. Why? Because we're not looking at any income, it is considered a high-risk loan, and the minimum requirement is 640. Now, if your scores are as low as 640, be prepared to qualify for a 65% loan to value. That means the minimum down payment mentioned earlier is going to be increased due to your credit scores. The higher the credit scores, the more likely you'll be able to qualify for that minimum down payment of 20 to 25%. If you found a property, the numbers work, and let's say your mortgage payment will be $2,000, you're collecting $2,500, that is above the 1% ratio that we're looking for, and we should be good to go. However, there are scenarios where rent is lower than the mortgage due to HOA fees, things of that nature. We can still make it work. I would rather you reach out to me to run that scenario to ensure that there aren't any hiccups. Some other things that you may be wondering is, all right, Candy, I just bought this property, I did the renovation, I have a tenant in it, and I need to refinance this hard money loan. If your hard money loan is up for maturity, this is usually the next step that people are taking to qualify for the long-term loan product, especially if they don't have the income documentation required for traditional loans. If you're refinancing, keep in mind that the net proceeds from the cash out refinance can be used towards reserves. For more questions about this loan product, all of my information is below in the description. First step would be to apply, which there's no fee. Feel free to message me so we can schedule some time to consult about your loan scenario. Thanks so much for dropping by today, guys, and I'll see you on the next one.